This is episode 1178.
Our strategy centers around kind of embedding trust into how, AI is developed and deployed. We've, formalized this through what we call a trust framework, which ensures that, the decisions we make, with AI are explainable, systems are resilient, and as threats evolve, outcomes remain fair and data is protected. So I think just as importantly, we also rigorously validate performance in real-world conditions so institutions can, rely on the AI to scale safely. And I think that's one of the biggest challenges with AI today is this safe? Is it telling me the right thing? Can I trust it?
What happens when the CFO isn't just reporting on the business, but actively reshaping how it operates? Today, we're exploring a finance leadership mindset that challenges the traditional boundaries of the role. In a world where AI is accelerating decision cycles and risk is evolving in real time, the ability to understand the business end to end is no longer optional. It's essential. Our guest brings a perspective shaped by transformation, integration, and strategic trade-offs. Our talk with CFO David Larson of Feedzai begins after this. Hello, CFO David Larson is with us. David's career reflects a steady expansion from deal-making and corporate development into enterprise-wide finance and strategy leadership. At Thomson Reuters, he led large-scale capital allocation and transformation initiatives, overseeing hundreds of millions in investments while helping reshape the company's operating model. He later stepped into a chief strategy officer role there, sharpening his focus on growth and competitive positioning. Today, as CFO of Feedzai, Today, as CFO of Feedzai, he brings that combined lens of finance and strategy to a fast-scaling AI-driven business where decisions around risk, investment, and global growth carry real-time consequences. David, welcome.
Thank you, Jack. It's a pleasure to be here, and thanks for inviting me.
Yeah, so we love to open up by asking the guests to look back for us, David, and try to identify some of those experiences they feel best prepared them for this role. When you look back, what do you see? What pops up?
Yeah, it's a good question, and something that I get asked a lot about, especially by my kids. My kids are kind of in their mid-20s, early 20s, and just trying to figure out how to work around the current technologies in the world and what they should be doing. But my career began back at Ernst & Young when I was hired as an intern, but I quickly realized I was hired into the tax department and realized it wasn't a good fit for me. And so I decided to go back to school and get my MBA. And fortunately, I moved into a role with a company that was doing roll-ups of accounting firms across North America. And so I was an M&A analyst, and I didn't know anything about M&A. I didn't know anything about valuing companies. I didn't, really know anything other than what I had learned at Ernst & Young and in school. But fortunately, that allowed me to spend the next 20 years or so of my career doing corporate development for companies. And this included doing due diligence on companies. And I was also able to lead integration teams, and not just the operational integration side of things, but also the go-to-market and the customer-facing side. And I truly believe that this kind of non-traditional finance background was very influential and helpful for me in becoming, more of a well-rounded finance professional. I have, many conversations with colleagues and people that I've worked with in the past, and their roles are very much what you would expect. They had an accounting undergrad or a finance degree, and then they moved up through a finance chain. And that was not my experience. But I think what the experience gave me was a really good understanding of how companies operate, what what are the requirements for them to scale? How do you pull the levers in the business to make things, more effective for growth or profitability? Really looking at how to look at a company from A to Z. And when I went to Thomson Reuters back in, the 2008, 2009 timeframe, where I did spend the majority of my career, I spent 15 years at Thomson Reuters. I was afforded opportunities that enabled me to manage a P&L. So I had all this corporate development experience, but really no true traditional finance experience. And they gave me the opportunity. I was a finance leader for a business unit. I was an interim managing director for our legal and Ireland business unit for about 3 months. I, supported functional lines of business like technology, our technology and enterprise group at Thomson Reuters. And I was given an opportunity to be the head of corporate finance, which is effectively at Thomson Reuters kind of a deputy CFO role. And I was able to see the full financial picture of the organization, all the dynamics of the business. This also gave me, good board visibility. I had many times where I sat in the board meetings and got to see the dynamics of that. And then ultimately my last role at Thomson Reuters was Chief Strategy Officer, which gave me completely different insights and probably one of the more impactful roles I had to look at things beyond the next month and the next quarter. But, what do we need to do for the mid to long term of the business?
Wow, a nice overview for us. And again, just to simplify it, and I'm sure there's much more to it as you just outlined for us, but it sounds like you landed at Thomson Reuters sort of in corporate development, but then you were able to broaden yourself. And of course, when you exit Thomson Reuters, you step into a CFO role, a COO role.
Yep.
Is that the short abbreviated one?
Very good.
I'd love to go back to that first chapter in corporate development. It sounded, you made an investment of years there for sure, something you probably found very satisfying for the first decade or so. Was there ever a deal, that didn't go the right way or one that you might have misjudged? You don't have to be, you don't have to name the companies, but what was the circumstances?
Yeah, I think quite a few, actually. I think when you're in this role of corporate development and you're doing this for a company, there's obviously, even if you don't try, there's a bias, right? Your job is to do transactions for the company. Your job is to grow the business. Your job is to find really good companies to add to the portfolio or add capabilities, whether it's a product acquisition or the like. And so I've been involved with a number of acquisitions that we did. And one company that I worked at, was a software company. It was a private company. And the goal was to take this company public at some point. And there was probably 2 or 3 product acquisitions. If I step back and I know what I know today, we shouldn't have done those. And, this is where you're in a certain role in a company, and this can apply to any role within a company, but predominantly in a finance role, where you should be using a lot of facts. You should be using data to help support your decisions. And I think we let a bit too much bias get into some of those conversations or some of those perspectives. And so I've been a part of a number of transactions where if I know what I know today, or I knew 6 months prior or post the acquisition, should we have done this? I think the answer to that question would have been no. But the other thing I think I've learned through my work in corporate development is how important it is to effectively integrate companies within a business. Your strategy can be different. It could be full integration very quickly to make everything work, or you can wait and do things selectively. Just so you have a plan and you follow through with that plan and it makes sense. I think too many companies, and I will say that, Thomson Reuters is, not different than other companies, right? We did some acquisitions and we probably didn't do them as effectively as we could have from an integration perspective. And those are the things you learn, right? You just try not to do something so drastic that it's going to take your business down. But at the end of the day, you got to be selective about how you do these things and just have a strategy.
So at Thomson Reuters, and again, you made an investment of 6 years there. You sort of pushed into more mainstream finance, if I understood correctly, as well as strategy, beyond corporate development. You made these moves. How are you doing that? Knocking on the door, raising your hand? How do you maneuver yourself to broaden like that?
Well, so my evolution at TR began when I was willing to raise my hand and say I'm willing to move from where I was at the time, Minnesota, to the United Kingdom. So we bought a company. We bought a company, and we took two other assets that we had within the company, and we built a business unit called Governance, Risk, and Compliance. And it was kind of a funny story, but the CFO that was currently running that business unit kept giving me a hard time telling me that the board paper, or the model that we put together to get approval from our board, was never going to be achievable. It's too difficult. And, my comment back to him was, oh, this is a layup for you guys. It should be really easy for you guys to hit these numbers. And he goes, well, why don't you come and help me do this? So I have 3 kids and a wife, and we all moved to the UK, and we were there for 3.5 years. And I think it was just my willingness and ability to, do something, different than a lot of other people may have the comfort in doing. And from there, I was just afforded opportunities as they come. I think I was in this business unit for about a year, and there was an opening to be the CFO of our UK and Ireland legal regulatory business. And so I went and became the CFO of that business. And then I ultimately, took another role in the UK. And then I ultimately moved to Switzerland for 5 years. That's where I became our CFO of our operations and technology business. And then from there became our head of corporate finance. And then from there became the chief strategy officer. So I don't think it's anything about me that's special. I think it's more of the fact that I was willing to take risks in my career, and I was willing to do things that were maybe a bit uncomfortable. And I think people recognize that. Do they take advantage of that? My wife would say absolutely. I did work a lot of hours and I put in my time, but at the same time, being a career-minded person, those are things that I just took risks on and were afforded opportunities to continue to progress in my career.
M&A, yeah, as you just explained to us, M&A really opened the door to you moving to the UK. There was an acquisition of a company. Can you reflect a little bit about what made the integrations hard at times when there were difficult integrations? What was at the root of it most often?
Poor planning. I think that's ultimately what it is. Poor planning and probably not having enough resources that are invested in the business. And I think that's one of the risks that even today in my role at Feedzai, where I'm the CFO, we did an acquisition, almost a year ago. And the thing that the team did really, really well is plan for the integration. Now, is everything perfect? No, it's not perfect. Nothing is ever perfect. But I think poor planning and lack of focus is a big challenge. And I would say the other thing that we assessed very, very clearly, and this is something that I learned along the way and probably the hard way, is ensuring that the culture of the business you're buying can mesh with the culture of the business that they're going to be coming into. And again, I'll use the acquisition that we did at Feedzai. I think we spent a lot of time ensuring that the company that we were going to buy culturally was a good fit for the business for Feedzai. And so, to me, the ones that haven't gone well is you either don't plan well, you don't put enough executive focus on it, or you don't put the right people in the business to actually lead the business, or leave it alone and let them continue to do their own thing. And then if it's not a good culture fit, my recommendation is always walk away as fast as you can, because no matter how good the business is, if the culture doesn't match, it's going to be a really challenging situation.
We're going to want to talk to you a little later more about AI, but I have an AI question here because I think would love to know your M&A mindset, whether now that we're in this age of AI or however you want to characterize it, how is it challenging some of your strong strategy dictums when it comes to M&A?
Yeah, I don't think so. I mean, I think, Feedzai today has leveraged AI technology for a long time. So, when there's a lot of euphoria right now about, agentic AI and, different than, what maybe the historical AI was. We've leveraged it in our products for years. From an AI perspective, we continue to look at companies that also leverage that technology, and would it be a good fit for, for the company? I know, Thomson Reuters, for example, very clearly is investing a lot of money in artificial intelligence in companies that can leverage that technology to make their products even better. So I don't think it creates issues. I think it actually creates some opportunities if you can leverage the technology right and you can deploy it correctly. So no, I don't find that to be maybe something that dissuades us from looking at things. I actually think it provides us more opportunities.
I guess, and forgive me, I'm gonna, in a clumsy way, I was trying to ask something related to the fact that AI companies can spring up within 18 months, and are they all of what they seem to be? CFOs need to cast a sort of a careful eye upon them.
Yeah, no, that's definitely correct. I mean, you read it in the newspaper and you read it in the financial stuff all the time. These new companies that were, invented 8 months ago and just sold for 400 million. I don't think I would have the appetite to do something like that. But definitely we wouldn't actually look at a company probably today if they weren't, a solid product company that is leveraging the technology appropriately. But yeah, I don't think the company I'm with today would, ever look at a company that was developed 4 months ago and say, this is a good idea, right? There's just too many holes probably in the business and the product.
Well, let's find out about Feedzai then. How would you describe the business today in simple terms? Tell us about this company.
Yeah, I mean, Feedzai at the core, what we do is deeply human because every transaction in the world represents something that matters to people. It's, you can think about people's life savings, or, they're investing in a business idea or college education or saving for a new home. What we try to do is avoid financial crimes from happening. And, when they do happen, it's not just a monetary loss for people. It's a loss of trust, stability, people's peace of mind. And our mission at Feedzai is to build a world of safer money. And this is a new, campaign that we have out in the market. And it's absolutely true because financial safety is really human safety. So we work with the world's leading financial institutions. They use native AI solutions to detect and, stop things like scams or money mules, fraud, money laundering, et cetera. So, Feedzai as a company on an annual basis, we safeguard more than 1 billion people and, $9 trillion in payments. So I love working for the company because the mission of, protecting the money supply and keeping people safe. I mean, it's a great mission to be part of. And, our products do that for our clients and their clients.
Can you, would love to know a little bit about the capital structure. How has the company's funding shaped its growth so far?
The company started roughly 12 years ago as 3 founders, all brilliant, human beings who've got, great engineering background. And they went through their scale up process and, people had to take a chance on the company. So over time, they've gotten more and more funding. We're at the point, we're a healthy company with a healthy balance sheet. We have cash to continue to do what we need to do. If we wanted to do something bigger, we'd probably have to find, additional investors to come in and help us out or do some sort of a raise, of that nature. But at this point in time, I think we're beyond the scale up phase where we're, looking to potentially run out of money and therefore we need to get more funding. That's not where we're at as a company. So I think the leaders and the founders and the people who, started this business did a fantastic job of building a good group of investors to go along on the journey. You hear a lot of companies that have investors that have 3 to 5 year investment horizons. Feedzai has had investors in there from the beginning, and they just have a great belief in the company and a great belief in what we're doing in the market. And so, I think we have a great group of investors that support what we're trying to do every day.
What then really drives performance across this business today?
A number of things. Given the fact that we are predominantly focused on the tier ones, what really matters is the relationships that we built with our customers. So we have a strategy called land and expand, where we really try to sell a use case into a customer or a few use cases into a customer. And then over time, as their transaction volume increases, as their needs increase, we have a full suite of products that kind of follow the end-to-end risk, fraud, and compliance, or we call it risk ops process, where we can, help them on the identification side of things. We can help them on the fraud side of things. We can help them on the anti-money laundering side of things. And so that's our strategy. What was a kind of a interesting thing for me coming into this role was the sales cycles can be long, right? Banks are complicated things. I worked for a bank for 9 months, and the amount of regulations and things that the banks have to go through to get things done is sometimes probably not as efficient as it should be, for sure. So it's all about developing trust with our customers and being partners with our customers. We treat that very, very seriously at our company. We're very focused on customer satisfaction. And we also engage with partners that are also focused on that for the tier 2 and the tier 3 parts of the market. So we work with companies that will sell into those, and we are the engine behind, their solutions. So, for me, that's the most important, is trust. And that's kind of the, the barometer and the benchmark that we live by.
So what is the sort of the input metrics that you're looking at that tells you things are improving? What would those be?
So things like, are we building our pipeline appropriately, and are we building our pipeline fast enough? Are we converting that pipeline? So our we hired a chief marketing officer, new one, and I can't remember if it's been a year, but she has brought in a number of things into the organization that have been just fantastic for us to look at. So it's really looking at return on investment on the campaigns that we're doing and the digital marketing that we're doing, how that top of funnel is leading into, conversions on deals. So pipeline, conversions, by product, by region, those are things that I look at every single day to make sure that, we're continuing to, support the health of the business. And then in addition to that, with a company like ours, a good portion of our costs, sit in our cost of goods sold. So we do a lot of implementations on our own of our product. We are looking to, partner more with firms that this is what they do on a full-time basis. And, that will help us from a margin perspective, and at the same time continue to delight and support our customers. But one of our biggest costs is, our hosting costs with customers. And so one of the things that we're, very focused on is looking at our current customer mix, making sure that the margins are appropriate, making sure that we're, getting scale on things like our hosting costs and other things. And so gross margin for me is probably one of the biggest things that I am pushing within the organization to make sure that we have a healthy growth margin today, but there is opportunity for more. We're not managing the business today on a EBITDA margin. We're really focused on making the right investments to continue to grow and scale the company. But gross margin is one of those things that we are looking at, because the less we spend there, the more we can spend in other parts of the business. So if I had to pick a couple, one is just making sure that the evolution of our sales and the pipeline and the conversion, by product, by region, are continuing to improve. And then also gross margin is a big thing for me to look at.
When there's maybe a major product upgrade or enhancement that's going to require a sizable investment, how does that investment decision get made at Feedzai?
Yeah, I mean, we have a group of people who are on our senior leadership team that, if there is something that, a customer is looking for, or you could even say the M&A transaction that we did, 12 months ago is pretty much a product acquisition. Mm-hmm. We have the CEO involved, myself involved, our legal team's involved, sales is involved. It's kind of our senior leadership group that gets together and we talk about it. So it's, it's a sophisticated process. It's a business case process. We don't do a lot of capital investments per se. I mean, if I was at Thomson Reuters, we used to deploy millions and millions of dollars into capital expenditures each year. We had this big governance process, and, a lot of people were involved, and it became cumbersome and sometimes overly complex. I think one of the benefits of working with a company like Feedzai is we can make decisions pretty quickly. So we do asked for a business case. We asked for what kind of sales are we going to see if we built this product? What is the profitability? What is the average, the average value that we should expect from each contract, et cetera, et cetera. So it's very sophisticated, but the great part is we can make these decisions fast. So, these are things that product will bring forward, or there'll be something that comes from a customer, and a customer will say, I'd love you to build this solution, build this feature into your solution. And we won't just say yes. We will actually look at it internally and say, is this a priority for us? Is this an investment we want to make? And if we make those investments, we do expect a return on it. This isn't just for fun.
We always like to speak to finance leaders about some of the trade-offs they're making. Sometimes it comes down to discussion around growth and efficiency. Where do you feel the biggest trade-off in this business is today?
So we made a pretty conscious decision last year to invest a lot more into our go-to-market organization. As we continue to scale and grow, we need to make sure that we're investing, where we can continue to scale and grow. And so where we made trade-offs was, pretty much our G&A functions and our customer support functions. And the decision was made because, as Feedzai continues to scale, the groups that I mentioned, and I'll use finance as an example, we need to find ways to scale our team without adding more people. We can leverage technology, and I know we'll get into the conversation around AI and how we're leveraging AI within finance. But we had predominantly been, a very manual organization, doing a lot of spreadsheets, doing a lot of manual processes. And so we made a very deliberate decision 12 months ago that we were going to be much more focused on investing in marketing and our revenue team, and continue to invest in our product, which we always will do and continue to do. And we took some perspectives on, we don't need to invest as heavily into our customer support organization or our G&A functions. So we can actually take some of that investment and actually pour it into into the areas we felt were more important.
That obviously GDM became a bigger focus for your world as well, your daily week, I suppose.
Yep.
I'm just curious, how did you change your mindset about GTM? Was it something that came from the marketing side, or was it sort of synergistic together?
Yeah, it was kind of both. So I'm spending a lot more of my time these days having conversations with our CRO and our CMO and the teams associated with that, and also spending more time really understanding what our customers are looking for and what our customers need. And so it's probably an area that I didn't spend enough time on in my first 12 months of the company. Now having the focus there, I think provides, intangible benefits, to my team, because I'm able to provide them more insight into what we're doing. We also have created, a concept of a trading desk that allows myself and our CRO and our chief product officer and our head of customer support to come together and really talk about deals. Like, do we want to sell them this product at this level, at this price, at this margin? And I think it's been a great addition to kind of our process, because we can all come together as a team, and we can win together and we can lose together. There's some accounts that we'll probably approve and they'll not end up being what we want them to be. But I think for the majority of them, they will turn out to be, great customers for us, and it'll be a mutual benefit for both sides. And when I came into the company, one of the things that the CEO, Nuno Sebastião, asked me to do was to really rebuild or build the finance function to scale. We didn't have the systems we needed, the tools we needed, the process we needed, and frankly, some of the people that we needed. So the first 12 months at Feedzai was all about that. Once we got through that and we made the decision as a group to say this is where we need to focus, because I had that foundation built, I can take and direct more of my time on the things that are going to actually help support continued profitable growth for the company.
Were you able to sort of energize your GTM strategy with the existing tools, or was there another platform or something you had to bring in to help you achieve the visibility? Yeah.
No, we had the tools in place. I think it was just more of consistency. It was more following, kind of a sales process. It was more, ensuring that people understood, what they were going to hear and what we were going to do as a result versus being a little bit more amorphous in nature. So no, the tools are there. I think it was just more, building the muscle, building the machinery, and building the consistency. And this is one of the things that, I think is playing very well with our investors on our board, is the fact that we're becoming more of a repeatable machine from quarter to quarter. Now, we do have big enterprise deals, and I think you would know that those enterprise deals sometimes get challenging to really predict and forecast where you're going to end the quarter, and you're always coming to the last day and hopefully getting the deals done. We are looking to, add more logos to Feedzai faster than what we had in the past, and that will help, with smooth out a little bit of the lumpiness in our sales cycle. But for the most part, I think it was more, it was less about systems. It was more around process, and it was more around consistency.
So you mentioned AI in passing there. Where are you actively using AI in the business today?
Yeah, so our strategy centers around kind of embedding trust into how AI is developed and deployed. We've formalized this through what we call a trust framework, which ensures that the decisions we make with AI are explainable. Systems are resilient, and as threats evolve, outcomes remain fair and data is protected. So I think just as importantly, we also rigorously validate performance in real world conditions so institutions can, rely on the AI to scale safely. And I think that's one of the biggest challenges with AI today is this safe? Is it telling me the right thing? Can I trust it? So the way that we approach this, I think it allows our customers to adopt the advanced AI capabilities with confidence without introducing unnecessary risk or complexity into their operations. And I think that's super important for the customers that we serve. And then from a finance perspective, we leverage AI already in things like our ERP system, our T&E system, our procurement system, and some of the productivity tools that we look at. We are further looking to accelerate this across our team. And it's really a key initiative that I've given to my finance leaders to say we need to find ways to continue to leverage this technology. We have to be smart about it. There is probably a propensity to proliferate AI in too many areas, and then it just gets way too confusing. So we're coming up with what our priorities are. What are the key things that we want to do as a finance team? One of those is to, develop dashboards that are more self-service in nature, that just leverages the data from other parts of the company. And there's a few things that we've already done that are, phenomenal, right? It takes much less time than it did before. And then the message that I'm trying to deliver to my team is, don't think about AI as AI is going to take my job. Think about AI as an opportunity for you to become more strategic, right? One of the areas that we're still a little bit manual in nature and we need to get better at is how do we forecast and plan the business? I think I have a team of people that do this phenomenally, but we are still using a lot of spreadsheets. And so they've already embarked on a journey to say, how can we leverage the AI technology more effectively? Give me that predictive forecasting and allow us to spend much less time in spreadsheets and linking spreadsheets together, which is also fraught with challenges if something breaks in the process. So for me personally, I use this technology all the time, right? I can just put things into a ChatGPT or Claude and just ask opinions on, what are key talking points? How do I prepare for this? And it's just saved me so much time and effort that, I don't think there's a going back on this. I think the technology is only going to improve. And I think the companies that can embrace the technology, both internally in their operations as well as in their products, are going to be clearly the winners.
I'd love to have you reflect sort of on the CFO role. How is that leadership role likely to be enhanced or changed? What's going to happen here? You seem to be playing a larger role across the organization in some ways.
Yeah, I mean, to be honest with you, I think the role of the CFO is a trusted business advisor. I think one of the things that, when I was growing up in my career, some of the companies that I worked at, the CFO was the numbers guy, right? They're the ones that brought forward, what you needed to do from a P&L perspective or a balance sheet perspective. I view the CFO role today to go well beyond traditional finance. I think number one, it's really being a leader for the organization and a teammate to the rest of the senior leadership team, with perspectives outside of the numbers. And I think my experience, gives me some of that capabilities given what I've done, in my career within M&A, as well as with the chief strategy officer role that I had at Thomson Reuters. I think secondly, it's increasingly centered on shaping strategy, driving growth and ensuring the business is positioned for both long-term scale as well as value creation to investors, whether that's in a public company environment or a private company environment. I also think finance leaders are expected to bring a broader perspective across operations, investment priorities, and the market. I mean, one of the things that I continually do for myself is try to learn our business, learn products, spend time with our chief product officers, spend time with our, chief information officer, research people, just to really understand what we're doing and how our products work. I've seen all too often in my career, finance people just being myopic in what they do. I do the spreadsheet and I don't have to really learn how this business makes money. I just have to, produce this on a monthly basis. And I think it's really important. And I wish companies would do a better job of onboarding employees and making them become experts in what we do as an organization. I think Feedzai does that pretty well. And then finally, I think one of the jobs of the CFO, it's a job of everybody, but I think just given the placement of this role within a company, is bringing the data and getting into the details. I mean, data-driven facts are key, in my opinion, to influence. And then, therefore, you need to get in the details to understand the data and the importance of that for the company. So that's one of the things I would say over the last 9 months, once I got through the majority of the transformation efforts within the finance team, just spending a lot more time in the details and making sure that details and the data that I'm providing to the rest of the organization are understood. And I think that's another area, if I'm speaking to, a new finance professional or even my kids who are in the finance world, you got to be able to take this data and all this detail, and you got to make it simple enough for everyone in the organization to understand it. So it's the storytelling part that's really important.
It just sort of strikes me that this is again a fraud prevention platform. This is you talked about identification, fraud, money laundering for financial services companies. The fraudsters are using AI. We know a lot of these large banks are under constant attack these days as well. I mean, it just seems like the risks are also growing in the area due to AI. I don't know if you have anything to share on that or not, but it seems like you're at the intersection.
Well, we talk a lot about it. We talk a lot about the advanced things that bad actors are using to try to, break into the system and do the things. And that's why it's really important for us to continue to invest in our product, continue to invest in the people that we have so we can stay ahead of what that looks like. Now, you're not going to ever be able to solve everything, but one of the things that I think I'm very proud of what we do as a company is we invest a tremendous amount of money in our product organization and our research organization. And we do that purposefully because we need to stay ahead of the game, right? We need to make sure that we're staying ahead of these things, the trends in the industry. We work with very important banking companies and financial institutions, and they trust us to help them identify and to monitor, their landscape. So it's really important for us to stay ahead. So that would be the thing that I would say is it is top of mind. People in the company think a lot about it, but we also try to make sure that we are doing the things that we need to do to stay ahead of the bad actors out there.
David, we're up to our finance strategic moment question. Again, this is when we ask you just to look back and sort of share with us one moment of strategic insight that you've had along the way. Probably had a few of these already today. What comes to mind when we ask for a finance strategic moment?
Yeah, it's a really great question. And, to be honest with you, I find it difficult to answer. I think careers to some extent are a series of moments. and they can either positively or not positively impact your ability as a leader. And I guess I would maybe throw out a couple. I know you only asked for one, but if I could be afforded two, I think the first one is a key insight was how we leveraged a shared services center in Hyderabad when I was at Thomson Reuters. A lot of companies go out and do this, right? They set up shared services centers in lower cost locations. In the past, for the most part, it's treated as a transactional team. We at Thomson Reuters were going through a transformation initiative, and one of the things that we wanted to do was to, reduce costs in certain areas so we can invest in other areas. This wasn't a cost-cutting exercise, but it certainly was an exercise to, find investments so we could invest in other parts of the business. And so we as a leadership team were thinking through, well, what can we do? We have this, team of people in Hyderabad. They're doing a lot of good transactional work for us. Is there an opportunity? And one of the things that, I had the opportunity of doing was to treat this team like they were part of the finance team. Why can't they do the work that, we're doing onshore just because they're in a different location? They're smart people. I mean, one of the things that I've always been super impressed with whenever I've been in India meeting with these people is they're highly educated, super smart, have a ton of ambition. And so the thought process was, how do we get that team to activate, what they're actually capable of doing? And so this required a lot of discussion, planning, influence. People in the business were not for it because they're like, the time zones are all messed up. We're never going to have time to talk to these people. Concept makes sense, but in practice, it doesn't make sense. So we planned. We had a lot of discussions. I had the advantage of being the head of corporate finance at the time. I didn't try to use that to my advantage because what I wanted to do is to discuss this with people and listen and make sure that the planning took into account people's perspectives, as well as trying to find people to champion the change with us. So while it wasn't perfect and while it took a while to get the transition, it's still in place and it's still working. And, maybe this is a simple idea, but I'll go back to where I started. I think careers are made of, simple moments. It's not just one big bang thing, or at least that's my experience. But the point isn't assuming your title matters. I think what matters is the way you go about changing hearts and minds. And for me, that was kind of maybe the first time I recall being in a situation where I really had to take the time, not just within the finance organization, but with the broader organization to make sure they understand what we were trying to do, that we're in this together, that this is, kind of a team process. But at the end of the day, it worked well, and it just gave me that, kind of perspective that I probably didn't have prior to that. And I think the other thing that I would just say that, for me, that was really important that I believe we don't do enough of is the way we hire people. And so I'll give you the example of when I came to Feedzai. I learned this earlier in my career. I had people tell me that, hiring people are the most important assets that you can bring into an organization. And I've made a lot of, probably missteps in my process. But when I came into, Feedzai, I had the need to bring in certain levels of talent, and I started feeling, a little bit anxious about it because I needed people to come in sooner rather than later. But I remembered what I learned along the way of hiring too quickly because I had an immediate need. And so what I did was took the time, made sure that I had the right, construct in place and make sure I had the right, perspective in place, and then just spent the time, hiring the right people for the jobs that they have. And it's kind of musical and magical when you bring in the right people and, you can just see the team gelling and everything else. And again, not a big bang thing, but it's, again, series of moments that have helped me along my career.
Excellent. Thank you for those. Wonderful. We are up to what we like to refer to as the mentoring round. We're going to ask you to look back again. We're wondering about the first time you stepped into a CFO role, and you've had a few CFO chapters already. So what would you tell us that first 60 days or 90 days you looked around and you thought, this isn't what I expected? Again, you had observed CFOs before, but there must have been something you may not have been ready for. What would you tell us?
Well, I would say number one, be confident. I mean, I went into probably my first CFO role being very apprehensive about whether or not I could do the job. I think people have heard the phrase imposter syndrome. Like, I don't think I should be here, but someone else thinks you should be there. So just be confident in that. And I think the other thing that I wish someone would have told me, and I said this earlier, is learn the business. Learn what you're actually doing as a company, because the more you understand about the products, the more you understand about the sales process, the more you understand about how you support your customers. Do you have an account management organization? Do you have some other organization that supports the product or the customers? It gives you, as the CFO, the opportunity to look at things a bit more critically, to say, yes, you need more investment here because we're not seeing enough, CSAT score. CSAT score is down. So what are we doing differently around that? You can have conversations with people much more richly if you actually understand what they do. And so, I have ongoing conversations with our CPO about our products and investments required and everything else. If I wouldn't have taken the time or didn't take the time to learn what the products actually do and how our customers use that, he's having a conversation with someone that doesn't respect, what we're doing enough as a company. And so therefore you're probably going to make bad decisions because you're going to make decisions purely on numbers. And numbers matter, but so does emotions, and so does partnership, and so do all the other things. And so those are probably the things, if I look back on my first role as CFO coming in, all guns a-blazing, understanding some of the, the mentors that I had in the past. If I could go back in time, I would do what I'm doing now, is just really become a student of the business, understand what we're doing, and making sure you can support the team. Because at the end of the day, the CFO and the finance team are a cost setter, right? So we have to be as efficient as we possibly can in supporting the business and providing the value where we can.
Nice. Thank you. Thank you for those. And we always like to ask our guests to reflect a little on the personal side. You've been there 2 years, a little over 2 years. There's something your colleagues might not know about you just yet. Anything from your past, an interest that you had, a pursuit, anything you can share with us that maybe some people just don't know about David Larson?
Yeah, I'm pretty much an open book, but I guess the one thing I would say is I almost chose to pursue not a professional career, but a collegiate career in basketball. I would have never played with a really good school. I would have probably played with, one of the Division II or Division III schools, and I wanted to be a teacher and a coach. So, I look back on those things with no regrets, of course. I can still coach in my role today, and maybe a different arena, of course, but it's still meaningful. But, it would have meant that I would have probably ended up doing something different in my life. And who knows? You never know with the decisions you make. I went to the same university as my wife. I would have probably gone to a different university if I'd have played basketball. You'd hope that there's, stars aligned to some extent. But, at the end of the day, I could have been doing something very, very different.
Any of the sons play basketball?
Actually, no. We lived abroad, so they did play a little bit, but for the most part, they were playing football, which is American soccer.
Yeah, interesting. Well, what about a book or some resource that you've relied on or has influenced your thinking, or maybe you escape with it? Don't know. Anything? A book or a resource for us?
I think there's one. And again, it goes back to the conversation that you and I, had around the storytelling. I got this recommendation from someone I used to work at, and I think he probably provided me the recommendation because I didn't do this very well at the time. But one of the key areas that I think finance people struggle with is really turning numbers into a story, just storytelling in general. I've worked with some real masters of this in my career and had some really great influencers at my time at Thomson Reuters and then another company I worked at. But the book is called The Minto Pyramid Principles. And for me, it was a life-changing book. And it's a very straightforward, it's not a fluffy book. It's more of a practical book. And what it helps you do is think through how do you structure your thinking, how do you structure your writing, and how do you structure your presenting. So it gives you the perspective of how do I tell a story, with what I want to do. And with finance people, it's how do you tell the story with the numbers. So this isn't a finance book per se, but it does help in my opinion, aspiring finance professionals learn to storytell, something that we're just not stereotypically good at, as finance professionals. And then another great book that and this is more for maybe my older finance peers, is a book from Arthur Brooks called Strength to Strength. And the reason I like the book so much is it helps you as you continue to mature both in age and in your career. When you're younger, you can do, 50 things at the same time and, balance all of that. As you get older, you just can't do it. I mean, it's proven factually that our minds change and we can't do the things that we used to do. And I like the book for two reasons. One, it gave me comfort that I wasn't going crazy. But number two, it gave me the perspective of what should I be focused on, and what I should be focused on now later in my career is, providing people coaching, providing people mentorship, and giving people, wisdom of things that people have taught me along the way and what I've learned. So really like the book.
Nice. Wonderful. Two selections we haven't had before. So wonderful. Thank you for those, David. We are up to our final question. This is where we're going to ask you to look forward finally. We'd like to know what your priorities are as a CFO for the coming 12 months. What would those be?
Yeah. So I think it's a lot more of what we talked about, already, but, we're in a scaling motion at Feedzai today. And so, my role is really to continue to support the finance function and transform. So, as we grow, we can take investments that would have otherwise come to our group and maybe invest in other parts of the business. But, we're focused on a number of business dynamics, including how do we continue to build value with our existing customers, but at the same time bring in a bunch of new logos, things around our pipeline that we talked about, converting that pipeline more effectively, the investments that we're making, whether that's build, buy, partner, again, repeat of gross margin scale, because that's investment that we can put into other parts of the business. And then all the other levers that we need to do to push and increase, our cash conversion and our margins. But I think also one of the things that, is falling into my lap, which is appropriate, is how do we just control many of the things that, maybe have taken place in the past as you're, starting up one of these scale up businesses and you're growing and you're growing and you're growing. Maybe a lot of the things behind the scenes, I wouldn't say are ignored, but maybe aren't paid enough attention to. So one of the things that, Nuno Sebastião, our CEO, has asked me to do is really focus on things like how do we control third-party spend? How do we make sure we're not proliferating tools and, systems within our company, making sure that we're looking at, productivity ratios and benchmarks to make sure what we know we're headed for. And then at the end of the day, just really optimizing, our cash that we receive from our customers and investing in the things that will drive the most value to the business, bringing in great talent and supporting our investors.
David Larson, thank you for joining us on CFO Thought Leader.
Thank you, Jack. It was a pleasure.